I think we need to make reining in the banks a top priority for the board. So I know the board meets regularly to discuss monetary policy. Do you think the board should have regular meetings on supervisory and regulatory issues as well, making it clear that both of those are important to the Fed?
Well, Senator, I absolutely believe that our supervisory responsibilities are critical, and they're just as important as monetary policy, and we need to take them just as seriously and devote just as much time and attention to them as we do to monetary policy. The board operates under a variety of restrictions. You may know about the government in the sunshine rule. And so when you suggest that the board meet to discuss regulatory matters, our ability to do so outside of open meetings is very limited. And so we tend to handle those by meeting individually with staff or meeting in small groups. We have a committee system where committees are put in charge of managing particular areas and making recommendations to the board. I remember in the 1990s that the board did regularly meet to discuss supervisory issues because there's confidential supervisory information, and it's easier for us to have a meeting, and I did consider those very valuable, and so I think that's a very worthwhile idea.
Do you think that the Fed's lack of attention to regulatory and supervisory responsibilities helped lead to the crash of 2008?
I think in the aftermath of the crisis, we've gone back and tried to look carefully at what we should have done differently, and there have been important lessons learned. We have massively revamped our supervision, particularly of the largest institutions, which we now organize through a process called the LISC, where we're simultaneously reviewing all of the largest institutions simultaneously, and the Federal Reserve System works jointly on these reviews. We no longer delegate to individual reserve banks the supervision of, say, one or two of these large institutions. It's also become an interdisciplinary matter, and that economists and lawyers and others are involved in. So we've learned a lot there about supervision. I would say one of our top priorities now is ramping up our monitoring of the financial system as a whole to detect financial stability risks. I think that's something that we weren't doing in an adequate basis before the crisis, and so we missed some of the important linkages whereby problems in mortgages would rebound through the financial system.